Hey everybody, it's Mike. Good afternoon. It's what is it? It's April 15th, 2025, and thanks for coming out to this special presentation on the order flows catalyst for NinjaTrader 8. I'm excited to bring it to you because it's something that a bunch of people have been asking about it. They've seen um, some of the output from it, and they're asking for more information on it. We just released it yesterday. Honestly, I wasn't planning on releasing it, but the traders that I had talked to about it were very interested in seeing it for themselves. So, before we begin, just a couple of things. Yes, there will be a recording of this webinar. You will get it later this afternoon, as well as it'll be posted on the YouTube channel. And, if you got any questions, put them in the chat. I'm going to try and keep this short. I'm not going to go on and on for hours. So, I will get to the questions at some point, but, for now, if you got any questions, just be sure to put them in the chat, and later towards the end, I'll take a look at the chat, the recordings. Sorry, at the questions. So again, yes, there will be a recording. It is being recorded, and we'll go from there. So again, brief disclaimer. Trading does involve risk. You should only trade with money that you can afford to use as trading capital, basically. We're all adults, we all understand that. So let me ask you, why are you still missing high probability trades? Maybe it's because you're drowning in market noise and confusing signals. The issues with order flow is, especially traders that are new to order flow, they tend to get confused with what they're looking at. And, I've always been wanting to build tools for traders that help them understand what they're looking at in the order flow. I mean, it's pointless to look at order flow and try to trade it if you just don't know what you're looking at. I see that over the years with traders, not just with a footprint chart, but traders trying to look at, the dome, the depth of market, and they think they're just going to pick it up right away, and that's not usually the case. It does take some time before you get up to that level, and that's why I create tools for traders to help them along in their trading journey. Maybe you're frustrated by using indicators that lag the market, right? That are telling you what already happened. It's looking back, in the past and not actually taking into account what's happening right now. Maybe you're getting caught by false breakouts or weak reversals, moves that look like it's about to happen, but then just sort of fizzle out, right? Or maybe you just lack true insight in the buying, selling pressure that's taking place in the market, right? Now, even basic order flow does have limitations, as well as, your standard technical analysis, right? It's not something that, especially if you're newer to the markets, makes sense right away, right? You have to understand what you're looking at, right? And again, if you're using lagging indicators that are price derived, you're always going to be behind the curve. You want to be making trading decisions based off of what is happening right now. Even in order flow, right? People think imbalances are the way because they're looking at the aggressive trading taking place, and that's all that matters. It's not. It's just one piece of the puzzle, and often when they see an imbalance, they don't understand it in the whole context of the market. I mean, an imbalance by itself could just be a big order that hit the market, right? Nothing more than that. And if there's no follow through, so the imbalance doesn't mean anything, right? Traders ignore how the market trades. They don't differentiate between aggressive and passive traders effectively. If you're looking at a normal candlestick chart, you can't see where the aggressive traders are taking place. I know a lot of people try to guess. I see videos where people say, looking at a simple bar chart, oh, there's aggressive trading here. Well, how can you say, looking at a candlestick chart or a bar chart, when there's no volume involved, say aggressive traders were active here? You don't know that. And another problem people face is they ignore when order flow matters, right? They don't adequately factor in market conditions like momentum. It's one thing to look at order flow, but again, order flow doesn't always reveal everything. A lot of times, all you're looking at in the order flow is just the facilitation of trade between buyers and sellers. I mean, that's why markets exist, is to transfer risk from one party to another. right? For risk takers to take on risk and people that want to take off their risk, hedge themselves, they come to the futures markets. And that's what makes up the order flow. However, there are times, specific times, when what is taking place is something bigger than just the transfer of risk, just something bigger than the facilitation of trade. And that's what you need to identify in the order flow. Okay. Now, when it comes to watching the order flow, the secret isn't just watching aggressive traders, right? Looking at, oh, there's an imbalance in the market. That's what everyone looks for in the order flow. And it is important, but again, you got to take it in context. And what we've found over the years of trading and analysis is it's not just that there's aggressive traders present, right? It's you need to understand how the volume, how that aggressive trading is being distributed between both, the aggressive traders and the passive traders, right? And when it matters the most, because again, there's always aggressive traders, there's always passive traders. Aggressive traders trade against passive traders, all right? But depending on how it is distributed throughout the bar and throughout the market is what matters the most. So introducing the order flows catalyst, right? This is going to be your edge in reading aggression, distribution, momentum, and point of control. Now, what is distribution discrepancy? Well, markets trade in a two-way auction, right? And basically you have to deconstruct that. It's aggressive traders against passive traders, right? Aggressive traders buy or sell to passive traders. Think of it this way, right? You're for those of you that maybe are a little bit newer to analyzing order flow, say you're going to look for a car, right? You want to buy a new car, okay? And you go online, you pull up whatever to look for a new Chevy Trailblazer, okay? And you see, oh, this dealer has this car listed for $30,000. Okay, he's a passive seller. The car dealer is the passive seller. You're the buyer, right? You want to buy the car. Now, you don't know if you're aggressive or passive yet. If you need a car, you're like, I need a car. I need to get to work. $30,000, I'm fine with. I'll pay that. Then you'll become the aggressive buyer. Okay. Now, if you are sitting there and like, oh, you know what, I want a new car, but my car is okay. It's lasting for a while, but I like this Trailblazer, but I don't want to pay $30,000. You go into the dealer, you kick the tires, and you're just sort of like, yeah, you know what, I'm interested in it, but it's just too much. You got any special deals you could do? And you have a price in your mind, right? So again, $30,000, you're not interested, but you know what? Hey, maybe at 27, you'd be interested. And the guy's going to say, well, yeah, I could take this, I could lower the price. I got this thing going on, the special going on, or maybe the dealer in the back of his mind has, a truckload of Trailblazers coming in next week, and he's like, okay, I got to move this car, okay. And he'd be like asking, where would you be interested at? What's your budget? And you say, 27,000. And this guy knows that he's got like 50 of these things coming in next week. He's going to say, okay, fine, I'll give it to you, 27,000. You become the passive buyer. The car dealer became the aggressive seller. He moved down to the market price because it's 27,000 right now, because that's what you're willing to pay. Okay, so you have to understand how the two-way auction works. Right? It's not just a bid and offer. You have aggressive traders trading against passive buyers. So you have aggressive sellers against passive buyers. You have aggressive buyers against passive sellers. Okay, so what Catalyst does is it analyzes the volume traded at the bid and offer, not just in the two-way auction, but up and down the bar. Okay, crucially, the Catalyst looks for discrepancies in how volume is distributed between aggressive traders, the traders that are removing liquidity versus passive traders who supply liquidity. Okay, that's what a passive trader does. They bid or offer in the market. Aggressive traders trade generally at the market. They buy the offer or sell into the bid. So what this does is it reveals underlying shifts in control before price makes its big moves. Okay, so again, it's not just about imbalances taking place, right? I mean, you see almost every bar in this example has buying imbalances or selling imbalances, and some bars have both buying and selling imbalances, right? Catalyst gave one signal here to the long side. Okay, it does have one buying imbalance in it, but like I said, almost every bar, majority of them have buying imbalances or selling imbalances. It's not just about looking at, oh, there's a buying imbalance that's bullish, right? You can't think that way because again, you don't know what's causing it. It could be just the result of a big order. You have to look at how that volume that's traded is distributed throughout the entire bar. Okay, now context is king when it comes to trading, right? That's why we have a filter for momentum, okay? Because distribution discrepancy alone isn't enough, right? The catalyst asks basically, is there momentum in the market when the signal occurs? So the point of that being is it's going to filter out noise in choppy markets. It confirms signals during established moves or potential breakouts. Because again, at the end of the day, what you want to do is trade with the market's underlying force that is present. And you can have the best analysis in the world. Doesn't matter whether it's order flow or technical analysis or fundamental analysis. You put on a position, you get long in the market. If nobody else in the world sees it at that moment, it may not go in your favor, right? Now, again, I'm not talking about like, a 10-year outlook of the market or, during subprime, right? Where there was a few people that got short very early, but they took a ton of heat, right? I'm talking about as a day trader, as a short-term trader, when you're trading intraday, right? If you have a view of the market right now, is the market going in that direction or not? Right? If you don't have other traders, which is the momentum behind you, sort of the wind in your sail, it's not going to go in that direction and you're going to get stopped out. That's just how it is. I mean, sometimes people, will come to me and say, oh, Mike, I got this great system or method for trading the market. It's like, but it's so isolated that if other people aren't trading in the same direction as you, the market's not going to move in that direction. What you want to be doing is trading in the direction of the market rather than fighting it. So what Catalyst also looks at, not just volume, how it's distributed in the bar, is also the point of control in the bar, right? Point of control, think of point of control as the bar's center of gravity. The point of control, right, is a term from market profile, right? Volume profile, which is the price level with the most volume traded at during the day, because market profile, volume profile traders generally look at the profile for the whole day. Order flow traders look at it on a bar by bar basis, okay? And it's on each bar is going to have a point of control, okay? And it's kind of like the center of gravity, where not all the volume, the most volume in the bar occurred. So you have your choice with the Catalyst of primary point of control or POC movement. You can't use both at the same time as a filter. I'm going to go into that later when I get into some examples. And the whole point is it adds weight to signals in bars where the POC stands out significantly. Because remember, every bar has a point of control, but not every bar's point of control matters. And what you have to do is put it in context with the market. Okay, like I said, every bar has a point of control, but just because it has a point of control coming in at a certain place is one thing. You have to put it in context with the rest of the volume trading in the bar, and not only in the bar itself, but relative to prior bars. Okay, you see these bullish ones, right? Again, we have point of controls coming in at the bottom of the bars, to the top of the bars, middles of the bars. Fine, but when you have a point of control, where it comes in matters in relation to how the market is trading. Again, not all point of controls are important, but there are some that are more important than others. So what makes the catalyst revolutionary is it can track PLC movement across price. Okay, because when you track PLC movement within the bar and relative to prior bars, it gives you clues as to how the market is going to be moving. And why this is huge is because it shows where significant volume is actively shifting. If you have a rising point of control, you have potential accumulation or buyers taking control higher, right? That's why it's called point of control. It's where the control is in the bar. Falling point of control, potential distribution or sellers pushing control lower. Provides dynamic insight into institutional positioning and directional bias. Okay, so again, we have this filter on. It's called PLC movement. This bar, again, showing you two examples. It's the same bars here. One has no PLC movement enabled. We have the signal coming in here, and it's not a good, strong signal, right? The market starts trading lower, then it comes back up and would have stopped you out. When you have PLC movement, right, you don't have that signal coming in because you don't have the good PLC movement that's necessary for the signal to fire off. That's why there's no signal on this chart here on the right. Okay, and again, it's important to understand how volume is not only distributed in the bar, but how it moves throughout a bar. Okay, now here's a quick chart, right? This is just the catalyst signals, not using the PLC movement. It's going to be for more general analysis, and there's going to be times when you're not going to want to use PLC movement, which I'll get to shortly. But here's a chart, same chart, exact same chart. This is an ultra bond 2 minutes, right? No PLC movement as a filter. Look at that, much cleaner, right? You don't have previous chart, right? You got a lot of little signals going off here. Some are good, some are bad. If you're a high frequency trader, that takes a lot of trades in and out, maybe you're not going to use it. Okay, but if you're, on a sort of a different, I'll say a longer time frame, it's a 2 minute chart. But this is a 2 minute chart, right? And you can see, you're catching the major move up. I mean, there was a little short down here. Okay, stopped you out. Then you caught it, major move up, decent move down, another decent move down, nice move back up right there. So people are going to ask, why not just use PLC movement all the time? Well, you can, but again, it depends on the chart type or market. You may not want to use it. So for example, if you look at a very fast moving chart, like say, again, I know a lot of guys that scalp, okay, that are interested in this tool. And if you're scalping, on say a 30-second chart or a 3-range chart, PLC movement is going to be very limited just because the bars are short by the very nature of the chart. Okay, maybe there's going to be 2 price levels that trade, or 3 price levels, or 4 price levels, right? If you got a bar with 2 price levels, one of them is going to be the point of control. What movement is there? There's not going to be anything. So by using PLC movement on fast moving charts, you're going to miss many opportunities because it's not moving. Okay, so in those instances, maybe you're not going to use the PLC movement. Okay, but if you're on a normal 1 minute chart and crude oil or currencies even, yeah, you can use the PLC movement. Okay, now this is sort of the beauty of order flows, is that you can see this information. If you're just looking at a normal candlestick chart or bar chart, there's no PLC levels showing in the bar, simply because it's not part of the bar makeup, right? A candlestick chart or bar chart is built on where price opens, the high, the low, and the close. That's it, right? It doesn't take into account volume. And even if you're looking at a bar chart and you have volume along the bottom, well, that's just the bar's volume. It doesn't take into account where it actually traded inside the bar. And that's why looking at order flow is important. And the Catalyst analyzes the order flow so you don't have to. Okay, what it does is it's programmed to analyze a footprint. It's like having a footprint chart running underneath your normal chart, and it's doing all the calculations, all the analysis on the back end. So it'll just plot on a normal candlestick chart. Okay, so that's why you could use it with a footprint chart. Of course you can, but if you're not interested in using it with a footprint chart and you already have a bar chart or candlestick chart that you use, you can plot it on there, right? So you could plot it on the existing chart that you're already using. All right, that's the beauty of it. Because again, a lot of people aren't interested in trying to decipher a footprint chart simply because they have their existing way of trading. They have their existing chart type that they use with maybe some other indicators, and they want to add another layer, a layer of order flow analysis to their existing method of trading. So, enough with the slides. It's always best to take a look at the market as it's trading. Okay, so let's just throw up a chart in here. Let me just make this a bit bigger. Okay, just bear with me here. Okay, that should be nice and big there. Okay, whoops. All right, so again, adding the catalyst is very easy. All you got to do is you just import it as you would any NinjaTrader indicator. And then once it's loaded, right, you just click on here, Orderflows Catalyst, your license token that you get when you purchase the software is necessary. You just drop it in there and you only need to enter it once. It stays on the back end. And these are the default settings, okay? Settings are very simple, straightforward. But I'll just run through them really quick here. Now it does have multi-timeframe analysis, so you could either analyze the existing chart that you're on. So for example, this is Ultra Bond 1 minute chart. It would just be the chart, period value 0. However, if I wanted to analyze it based on, a 500 tick chart, I could, or, a volume, maybe 2500, I could, a range, 3, 4, 5 range, 3 range, simple. You can just put whatever range you want to analyze, and it will analyze it on your existing chart that you have open. So even if you have a 1 minute chart open, but you want the analysis from a 3 minute chart, you can do that. Or sorry, from a 3 range chart, you can do that. Or you can even go below your existing chart or above it, right? So 30 seconds, if I have a 1 minute chart open, I want to analyze a bit faster off a 30-second chart, I could, just change it to second, put 30 minute, I could go, say I want to use a 3 minute on a 1 minute, I could do that, or a 5 minute analysis, etc. Okay, but let's keep it simple to begin with. The existing chart that I'm looking at, right? This is a 1 minute chart. Trade entry signal. This is something that I have on just about all my indicators, and what the point of the trade entry signal is it helps me trade in the direction of the market, right? It means when it's enabled, price level in ticks means if it's a bullish signal, the bar, so I have my signal bar, the next bar has to move 2 ticks higher than the signal bar over a period. In this case, I have it set at 3. So within 3 bars after the signal bar, it has to move at least 2 ticks. So I know the market's at least moving in that direction. Now the visuals, okay, I like to have zones. I'm a big zone person, right? I like to draw it out until tested, just because it helps me visually see that, hey, you know what, there's a bullish zone or a bearish zone. You can have it fixed, or you could choose not to even look at it. In that case, you would just change it, signal box width to 0. You don't have to worry about signal box offsets and ticks. That's just where it appears in the bar. Signal box opacity, how dark you want the zone to be drawn out. If you're using until tested, as long as you have a value above 1 and above for the signal box width, it will appear. But if you have it fixed, you have signal box width 5, it will draw it out 5 bars starting at the signal bar. Signal mark displacement is where it appears, how far from the bottom or the top of the bar. All right, so, but these are the important settings coming up here. So catalyst strength is 1 through 6. So what that does is it measures how volume is being distributed. 1 is the lowest, 6 is the highest. Okay, so 3 is middle of the pack, mid-range. It's just sort of normal distribution. But if you go 1, it's very lenient in how volume is distributed. Go to 6, it's as strict as it comes. Now there's an equals filter, and there's some rare instances that we found where when the volume is equal at certain points in the bar, either you want a signal or you don't want a signal. We've kept it in there. I mean, honestly, the difference is minuscule. Maybe 1 trade or 2 trades a day, if that even. But it was just something we decided to keep in there rather than take out. Well, I'll show you some examples. Prominent POC filter is one of the POC filters. And again, if you followed me for a while, you do know that prominent point controls are an important part of my analysis. It signifies support or resistance. Now, momentum strength, 0 to disable. Default is set to 2, which means there's a bit of momentum. The highest you can go is actually 6. So if you go 6, that's the strongest momentum that's taking place. 1 is sort of the weakest. Sort of the first sign of momentum picking up. 2 is kind of a mid-range. Again, 2 and 3, default is set to 2. But if you want, at least some momentum, 2 is a good starting point, as well as 3. Now, POC movement. Okay, this is what I was spending some time talking about, right? This is our new tool, our new filter that we've added in here. That it means that there has to be movement within the bar of the POC, right? And it has to either be bullish movement or bullish movement for a bullish bar, or bearish movement for a bearish bar. Okay. Now POC, so to enable it, you would click on that little box there, and then you're gonna see underneath it is POC movement. Okay, and this is kind of like a strength of the POC move. If you have it enabled, okay, it's going to be 1 and up. 1 is the lowest movement. You can go as high as you want, but it's not how much movement. It's sort of the strength of the movement. Okay, so 5. Honestly, I use 1, 3, 5, 10. I don't really go beyond that. I don't think you need to, but our default is set to 5, but I'll show you with some examples with differences taking place. Now we do have a sound alert. This other stuff, data series setup, visual, you don't have to touch any of that. That's just what you're analyzing, how it analyzes it, and that it's visual is that it plots on the actual chart itself. Now you do have the plots, so it's going to plot blue for bullish signals, red for bearish signals. Okay, triangle up, triangle down. Up for buys, down for sells. The width is default is set to 8, so it's a good size. So I'm just going to add it on here with the default settings. Okay, so there, just move that, click on it again, so get a fresh one. So you see 3, 2, 3 for strength, 2 for momentum. POC movement is off. And you can see up here in the upper left-hand corner, it says calculating. Okay, so this is the ultra bonds today. You see we got this nice trend going up. So again, the filters, or the settings rather, that you're going to use the most is catalyst strength, momentum strength, POC movement, or POC filter. People ask me which one do I prefer. You can't use prominent point of control filter and POC movement at the same time, because they one's more on momentum, the other one is a bit on support and resistance. So you're using sort of opposite ends of the spectrum there. So this is the catalyst strength at 3, which is mid-range. I'll show you if you set it at 1, right, you're going to get more signals. That's, you can see here, there's a few more. If you set it at 6, you're going to get fewer signals because it's much higher, right? So you can see here, didn't catch any of that move to the upside over. Let me just get the crosshairs up. Make it darker here. crosshairs, make this one 3. Okay, so you see there's fewer signals when it's set to a higher strength. Okay, and again, it depends on the market that you're looking at as well, what you're going to set it to. Let's just go back to the default setting of 3. Okay, and I'll just show you with prominent point of control filter on. With the prominent point of control filter on, there's going to be fewer signals. Okay, coming in here, as opposed to with it off. Okay, right, you saw more. Now momentum strength, again, if I turn momentum strength off, meaning no momentum, I will get more signals, obviously, okay, because it's not taking into account the market moving in that direction. And again, why, would you want to use momentum filter disabled? Well, again, if depending on the chart you're looking at, again, this is a 1-minute chart. I have a lot of traders that trade shorter time frames than 1 minute, and they just want to see all the signals, right? So that's why they would use it as off. Okay, you set it to 6, which is the highest setting. You can see fewer signals than you saw obviously at 2 or when it is off. Okay, and again, basically what it does, it just comes down to understanding the market that you're trading. Because again, if you're on a market, honestly, these markets that we're in are going berserko because of everything going on with the trade wars. Today is a bit of a calm day. It's nice to come into the market where we're not looking at a 150 point overnight range in the equities. That being said, I don't know if after the holidays things are going to pick up and go crazy again. Now, reset that back. Now, POC movement. Okay, so I'm going to enable POC movement. Well, let me just go back to the normal chart so you can see the default setting. Okay, now POC movement. Default is set at 5, but I'll just show you with, I'll show you with 5. Okay, so you can see there's the signals where they're coming in. When you add the POC movement, there's going to be fewer signals because now it's looking for those times where they get movement of POC in a bar. Now, again, this is a 1-minute ultra bond chart, which bars don't necessarily have a lot of price levels. Okay, so you're seeing POC movement only on the bars that have some decent movement itself in the bar. Like this bar from 118.14 had a high of 18. Okay, but a lot of these other bars are just 2 ticks. So using POC movement on this market where you've only got a few ticks, 3 ticks in a bar, isn't going to be very effective. So it's up to you if you want to use it. Again, it depends on the market. You got to be looking at the types of bars that you're trading, how they are in the market that you're trading. Okay, now that's set at 5, which is a little bit stronger. If I enable it, set it at 1, should be a few more signals. Right, so setting at 1, you can see there's some decent signals. Now back to the visuals, right? You can see signal box mode until tested, right? That's where these zones are being drawn out. The reason we draw out zones, okay, not necessarily for the point of the market trading back, right to that level, maybe give you a buying opportunity here, like a here. But if you bought here, you would have stopped out, sold here, you'd be stopped out. There's times where the price obviously comes right down to those levels. There's times where it doesn't come back to the level. Like I said, I'm a visual person, and sometimes just having a simple blue up triangle or a red down triangle isn't enough for me. I like to see a signal come in and the market immediately move away from it, right, where it doesn't even come back to trade. Those, in my opinion, are the strongest signals. Right, you can see here. here taking place, right? Yeah, it's nice that it comes back right to the tick and rallies up, but really what I'm looking for is the strongest moves are going to come when you have a zone being drawn out where it doesn't even come back and test it at all, right? And you know, the longer you're staying away from that area, the bigger the move. Now, that's using this visual setting. You can also have it fixed. So you can see the default is 5, right? So if I have the default 5 and I use it as fixed, I still have a zone, but it basically draws it out over 5 bars starting at the signal bar. So 1, 2, 3, 4, 5, and then it just ends automatically. Okay, if I don't want to have any zones, so say for example, if I'm using it until tested, okay, but it's like, you know what, I don't want to have those zones. The signal box width in bars, just change that to 0. Okay, so now all I'm going to see is just the up and down triangles, okay, which, you know, for a lot of traders they're fine with. But again, like myself, I'm a very visual person. Oftentimes I've got different markets I'm trying to look at and follow, and it's just easier for me to have the zones drawn out. But you don't have to use the zones if you don't want to, right? You can just simply disable it right there. Very, very easy. Let me just talk here really quick about, so let me just turn this off, get back to the default settings. Okay, so here's the default settings. Now the multi-time frame analysis. So say you're looking at a 1-minute chart, but you want to say use a slightly higher time frame. Okay, for example, 3-minute analysis on your 1-minute chart. Well, you just change the period type to minute. Period value is 3, so it's going to give you signals based on a 3-minute chart, but it's going to plot it on your existing 1-minute chart. Because say you got some other indicators working, all right, that you're fine with, you know, you're using certain you know, Bollinger Bands or something, okay, and you need it on your 1-minute chart because right now they don't have the ability with NinjaTrader, unless you get something custom coded, to use a higher time frame on a different chart. Here, say you like the signals that you see on a 3-minute chart, you know, based off your research of the catalyst, you could put it on your existing chart like this. So these signals that you're seeing is not based off the 1-minute chart. These are based off of a 3-minute chart analysis. You know, maybe you want to use, you know, a 3-range chart instead. Now it's going to be, you're going to probably see a lot of signals because 3-range chart is very quick. Right, you can see up here it says calculating. All right, so here's your signals based on a 3-range chart with the default settings. Of course, you know, you could always adjust it, you know, however you want. You know, say you want to use you know, POC movement off the 3-range chart analysis. You just, you know, you click there. Okay, so you're seeing some nice moves take place. Now again, you know, POC movement using the minimum because it's a 3-range chart. If I was on, you know, again, you're not going to get much movement, so I don't know. There's only 3-range chart. You only got 4 price levels. Okay, so maybe, you know, you want to use either a higher strength or catalyst strength or a higher momentum strength. Okay, so here I'm going to make the momentum strength 6. So it's going to be the strongest, right? So you're seeing I'm just getting those trades in the direction of the market movement, right? You see this whole move up. It's a lot of bullish signals. There's no bearish signals coming in, right? Because it's identifying that the trend is up. Okay. You know, set that, you know, if I even wanted to, I can make the catalyst strength as strong as possible. Again, this is a 3-range chart, so it's a very fast. Underline is a 3-minute chart that it's a 3-range chart that it's analyzing. So look at that with catalyst strength at 6, momentum strength at 6, right? What do you got? You just got bullish signal, bullish signal, bullish signal, bullish signal, right? That's it. You're seeing on that chart. You know, that's today, overnight, 2 in the morning here, bearish signal, another bearish signal here, 5 in the morning before the bullish signals came in. Yesterday, what do you have? 6 in the morning, 6:30, bullish signal. It was a bullish signal, pulled back a bit, you know, another bullish signal. That was it. But again, you know, this is set very strong. And that's on the reopen last night. But you see last night, yesterday, nice move up, decent little moves to the downside, etc. You know, even on, you know, other markets, I don't know, euro currency. Again, this is this, what was it? It was a underlying 3 range, catalyst strength 6, momentum strength 6. Okay, you can see why we got that nice sell-off taking place here in the currencies. It's just bearish all the way down, bullish for the most part. Again, you know, do you want to use 3 range? Depending on the market, you know, maybe you want to use an 8 range chart. Same settings, 6 and 6. I mean, again, the default settings that come out of the box with the indicator are good for most markets. It's your starting point. Okay, so let's just go, you know, here's 6 and 6. This is an underlying 8 range. You got to, you know, the analysis that's coming in is based, you know, this is a 1-minute chart, but it's doing the analysis based off an underlying 8 range. You can see a bearish signal here, bullish, bearish there, bearish all the way down. Let's just go back to the normal chart. Or I'll tell you what, all right, maybe you want to go 30 seconds. Okay, again, 6 and 6. I don't know how it's going to look, but let's take a look. Okay, so this is 30-second analysis. So it's again, who would use a 30-second analysis? Well, if you like to trade on a very short-term basis. Okay, remember, every trade should start out as basically a short-term trade or a scalp. If it doesn't work out, fine, you cut it. But if it starts working out, you try and ride it. But anyway, let's just go back to the existing chart, right? The 1-minute chart. Go back to the default settings, 3 and 2. And let's just talk about POC, prominent POC, and POC filter. So this is, right, the underlying chart, right? 1-minute chart, default settings, POC movements. Okay, so it's a currency. You get good movement on the chart. So we're going to use the enable POC movement, and you can see on the chart, you know, nice bearish signal here, bullish here. There was a bearish one. You know, it's a little move. You know, this market is exaggerated nowadays, but you can see it started selling off, then just went sideways. This is why I like using these zones, because they do give me a level that if the price gets back up to that level or back down to this level, if I'm in the trade, I should get out. You know, I use it as a stop level. You see here, nice move down. This one stops you off, but then you get back into the trade here to catch that whole move down. Let's go back to the settings here. Okay, so again, that's what, you know, you could play around with. You know, if you don't want to use momentum, you're going to get a lot of signals. If you're not using momentum, maybe you want to keep the catalyst strength stronger, because you're going to get, you know, these what I call false starts, you know, where it looks like it's going to start moving and then it just fails. But by setting the strength higher, catalyst strength higher, 6, it should give you the stronger signals. Another thing you can do, obviously, is use POC movement if you're not using momentum strength. Again, it's not about filtering out trades. I'm a big believer in trading in the direction of the market. That's why we have momentum strength in there. That's why we created this PLC movement in there as well. So you can see there's none in here taking place on this move down. Moment catalyst strength is 6. And if I got it set at a lower number, 3, it's as strong as you can go with catalyst strength. Okay, see in there. So maybe for this market, 5 is too strong for PLC movement, right? So if I am looking at the market and I'm like, I don't see hardly any signals. There's a bearish signal on the right. There's a bullish signal here. Then I know the strength for the PLC movement is too strong, so I would back off a little bit to 1, right, as my starting point, because I'm using it. I'm not going to put it at 0. You can't set it at 0. You just disable it. But now at 1, okay, I'm seeing some decent trade opportunities, taking place. Okay, you can see just going back overnight since last night, at 8 o'clock, right? Beautiful trend up, right? And again, the nice thing about the catalyst is you really only got to worry about catalyst strength, momentum strength, prominent point of control filter, or enable PLC movement. It's either or, right? You can't have both. You can't have prominent point of control and PLC movement, right? You see if I'll enable both of them. Right, actually there's one signal there, surprisingly. Okay, but generally speaking, you don't get signals. I mean, that's coming in very illiquid time, but during the course of the trading day, it's going to go against each other. Okay, so you're not going to have them both on there at the same time. So since there's, right, basically it's just catalyst strength, momentum strength, and the PLC, either prominent point of control filter or enable PLC movement. Okay, so default settings is a good starting point for all markets. And again, this is euro currency, right? This was yesterday. Japanese yen, right? This is going to be your starting point for, again, all the markets. I mean, currencies tend to move together. If you're on a market like, say, gold or crude oil, right? That gold is can be volatile at times. You probably want to either set, maybe the strength higher or enable PLC movement. So I'm going to enable it here, so you can see it's cleaning up a bit here, right? You see that's not a good trade there, right there. So maybe you're going to adjust your catalyst strength to take in a little bit more of the volatility. If you're going to trade, a range-based chart in gold, I don't know. People always ask me, what's the best chart to trade? What's the best market to trade? Well, it really depends. There's no best market. There's a good market for everyone to trade. But if I was looking at a market like gold, I would use the multi-timeframe analysis on a range-based chart, just simply because, and the same thing would I would for other markets that are a bit volatile, such as YM and Q, I would use a range-based chart simply because then it's doing the analysis based on price movements in the bar, as opposed to time. I mean, you can still look at a time-based chart, but with these more volatile markets, we're just back and forth trading up and down. It seems to make you want to pull your hair out when you're looking at a footprint sometimes. Using a range-based chart does help out a bit. Okay, so this is the range-based chart analysis on the time-based chart. And again, I could make the strength higher. I could change the momentum strength to 6. I do have the PLC movement on here. Again, it's set at 1, which is its minimum, right? So again, it looks like it's a choppy market, but again, this range is, 20, 29 up to what, 40. So it's 42. It's about $14 range, but there's decent trades to be had from the bottom to the top, from the top back down. Okay. Now, I just want to go over this really quick. Some of these settings, okay, so again, like the default settings, I was talking about the multi-time frame analysis. While you can use the underlying chart, it's just fine. People always want to optimize it for the markets that they're looking at. And as I sometimes I don't necessarily like to give fixed settings to people because they tend to want to take it fixed in stone. You have to adjust it based on the market, based on your own trading profile. What I mean by trading profile is your risk profile. But for bonds, currencies, grains, in addition to the underlying market default settings, well, I have PLC movement set at 1. Try a 3 range with a period, a range-based chart with a period value of 3. If it's like gold or crude, 10 range, the same catalyst strength, momentum strength, PLC movement. If it was like something like YM or MAQ, try a 25 range. Unfortunately, that's the market conditions that we're in right now due to the volatility. I used to trade, that's how old I am, but I remember trading YM on an 8 range chart. Now there's no way you can do that just because of the way the market moves. So if you're on a more volatile market and if you're struggling with the time-based chart, look at a range-based chart. Okay, so think of the Orderflows Catalyst as your new trading edge. It's going to pinpoint high probability entries based on true distribution and momentum. It's going to filter out destructive noise, which helps you trade calmer and avoid chop. You're going to be able to see hidden strength or weakness by understanding aggressive versus passive trading that's taking place in the market. Because again, there's always aggressive and passive trading taking place, but how it trades, right? And think of it, if you ever watch like car racing, Formula One or NASCAR, right? You always see the cars in front, right? And the real activity is taking place, the drivers jockeying for 5th place or 4th place or 3rd place, the back and forth that's going on, right? That's the real race, right? That's sort of the hidden race that's taking place. And the same thing in the order flow, right? You have the hidden strength or weakness that's actually taking place beyond where price is trading. Okay. Shakespeare used to have, all his plays got the play within the play. Think of it that way. Catalyst, helps you track volume control shifts by leveraging unique PLC movement analysis. So why is the Orderflows Catalyst different than any of my other indicators or any other indicator on the market? Well, it gives you true distribution analysis. It goes beyond simple imbalance reading or delta reading, right? And it's a more holistic approach to analyzing the order flow, right? It's got integrated momentum context by filtering signals for higher probability when you have stronger momentum taking place. It's got revolutionary PLC movement tracking, which is dynamic insight into volume shifts. Okay, because again, it's not, every bar trades volume. If there was no volume traded, there'd be no bar. What you want to do is you want to track how that volume moves within the bar. Now, is the Orderflows Catalyst right for you? Well, if you're a day trader or scalper that needs precise entries, yeah, the Catalyst is definitely for you. If you're an order flow or volume trader seeking a deeper edge, yeah, the Catalyst is for you. If you're a discretionary trader that wants confirmation signals, right? So, maybe you're a discretionary trader. There are guys out there, they shoot from the hip based on feel. Having a tool like the Catalyst makes them feel better because it goes with their intuition. Or maybe you're just frustrated with your existing indicators that lag the markets or the noise that you see going on in the market that makes it difficult to trade. If any of these are you, then yeah, the Catalyst is right for you. Now I got a special offer going on, right, for everyone. This is a webinar special, and this is for a limited time, right? The normal price is going to be $5.99, but for now, you can get it for $279. So just go to orderflows.com/catalyst.com, and it's going to take you to the sales page, right? It just looks like this, right? You can see here, orderflows.com/catalyst. You just, there's a lot of information about it, what it looks at in the order flow, some examples on how it works with the candlestick charts. Talk a little bit about trade entry signal. All right, see all this is explained, right? All the settings are explained in the user guide. And you got two ways you can pay, either by Stripe or by PayPal. Again, some people love PayPal, other people don't. That's why we've added Stripe. A lot of people have asked for it. Some FAQs. You don't need level 2 data, just level 1 to run Catalyst, okay? And there's no free trials. You don't need an Orderflows footprint chart to run it, and it is not a footprint chart. Okay, so don't think you're buying this, you're getting a footprint chart. No, it's an indicator that reads data as it would if it was a footprint chart, and it plots your signals on a normal candlestick chart. Okay, and you do need to run tick replay on NinjaTrader so you can see the historical plots. The license is good for one PC, so if you want to run it on another PC, that is going to require an additional PC, and right now it's only available on NinjaTrader 8. There are some people out there that are still on 7 because they got tools that haven't migrated to 8, but ours Catalyst is only available for NinjaTrader 8. Okay, and it's not available on MT4 or 5 or Sierra charts, or some Trading View, or it's not available on Go Charting. It's only on NinjaTrader 8. So again, just go to orderflows.com/catalyst, and it'll take you to this page. Just scroll down in there, and you're saving over 50% right now on the indicator. And again, it's just for a short time. Then the price is going to go up. Is actually this tool was supposed to be part of a bigger ticket package that a lot of traders have been asking for private training, one-on-one training, and this was supposed to be part of it, but but that training is out of a lot of people's reach. Where you work with me, trade with me, and we sit on a call together and we trade the markets, but not everyone is able to do that. But I do want to get this indicator out to everybody that is interested in it. Okay, there's a few questions here. Yeah, there's going to be a recording, so don't worry about that. Some people are asking about an NQ chart and an ES chart. Yeah, sure. Let me pull one up here. So what do I got here? Gold. Well, okay, so this is a 10 range chart. Again, I was talking earlier about using a range-based chart to analyze on a NQ. So we'll pull up an NQ. Now again, the problem with NQ is, especially again, today is kind of a, knock on wood, a slow day relative to how the market's been for the last week or so. Because if you remember, we're looking at NQ, you're getting some insane movements, and even you still are. And again, people say put it on an NQ chart. Not everybody uses a time-based chart, or I know there's a lot of guys that use range-based chart. Other traders use volume-based charts. Other people aggregate ticks on an NQ chart simply because some of these bars, I mean, like here, there's a bar that happened around 920, which is about, the bar is about 60 points wide. This is on, well, let me just go back to the 25 range again. You're probably not going to use 25 range, but let me just go back to the underlying chart itself. We'll start with the default settings, 3 and 2. Okay, there's going to be a lot of signals probably. I would imagine. I don't know because the catalyst strength is set to 3, momentum strength set to 2, but we'll sort of walk through it because again, on a market like NQ, it doesn't trade the same way these other markets out there trade. You know, there's a hell of a lot of volatility in NQ, especially during now with the trade wars that are going on, and it does affect. You know, it's almost like they keep making these changes. You know, recently for Nvidia said, oh, they're going to invest all these hundreds of billions of dollars to build chips here. Obviously, Nvidia, Apple, etc., are companies that are directly affected by these trade wars that are going on. So you can see, okay, so this is the default setting 3 and 2, right? These bars, right, even though there's a buy here, right, that failed, these bars 30 all the way up to 70, a 40-point bar, that's not good. You'd probably want to set momentum strength higher. During the US session, what do you call it? Volatility is obviously a lot more than during the night session. That's not to say that during the night session you don't get it, because you can get volatility during the Asian hours and even during the European hours. But we'll try it with momentum strength set to 6. It's probably set PLC movement, or honestly, I know with NASDAQ you don't get a lot of prominent point of controls, period, just because the bars are too big. Right? Prominent point of controls are more for markets that trade normally, not a market like NASDAQ that can be all over the place. So here I've set the momentum strength at 6. Okay, so still a couple bad trades in here. This is a market that you could catch some decent trends on. It did catch the earlier one where it moves from about 900 all the way up to 100. But overnight, again, these overnight moves, these big massive moves taking place here. Like I said, I like when you get the zones. That's why I hate to call myself a zone trader, but when I see these zones that are standing out over time and we sort of come back to it and then move away from, I love those type of trades. All right. But there's other adjustments you can make. Again, I don't want to spend too much time on it, but maybe you're going to use PLC movement. I don't know how it's going to look. Maybe I'm going to set the catalyst strength a bit stronger at 6. So 6, PLC movement at 5. Again, prominent point of control in NASDAQ. I just know by looking at NASDAQ, you don't get very many prominent point of controls to begin with. So it's not one that I would worry in a volatile market like NASDAQ or MNQ or even YM. Those markets, you tend not to get a lot of prominent point of controls. That's just how the market is, because again, the bars are very big because there's just not a lot of liquidity going through. So let's just give it a second here to calculate here. So again, I got this one very strict settings, 6, 6, 5. So there's a bullish signal. That was last overnight. That's how it is during the day. It's not much signals during the day. And again, it depends on the chart type. This is just a plain vanilla 1-minute chart. Let's move to ES because there's a question about pulling up an ES chart. There's a good 30, 40 contracts out there in the world, futures contracts that make good trading contracts beyond the equity indices. And people, I know it's glamorous to look at ES and MNQ because the moves are can be very big, right? And especially in NQ. But to me, it's about picking low-hanging fruit, right? Why bang my head against the wall trying to decipher NQ or MNQ when there's a lot of other markets out there? Like I was showing you the interest rates, beautiful moves that you can get in interest rates. So this was that same setting that I had just left with NQ. So it's, let's go back here. it was catalyst strength at 6, momentum strength 6, PLC movement at 5. But we'll just go back to the default. Again, I don't know how it's going to look. I'll keep the PLC movement on. Like I said, today it's kind of a calmer day. It's we're in a 40-point range more or less since the cash opened. You know, basically from about 54.40 up to 54.80, which is calm for this market. You know, over the last few trading sessions, going back to last week, we got some bars themselves were over 40 points. So just give it a second here because it's calculating. Okay, so that's kind of similar to what you saw on the NQ. You know, I'm sure you could do some adjustments to the settings to sort of figure it out. But again, you know, why bang your head against the wall? Right? This is right. This is the default settings. Right, 3, 2, and 5. Well, I'll turn off 5. So just 3 and 2. Catalyst strength at 3, momentum strength at 2. Okay, with the underlying chart again with trade entry signal on. Let's just put it on there in the ES. I did see a question here. Yes, Yolanda, it should work with markers. Basically, using the PLC filters from a higher time frame to a lower time frame and giving support and resistance using PLC versus just highs and lows. Yeah, Mark, in a way, you know, if you're using higher time frame, if you're using that multi-timeframe analysis, right, you would be using, so like if I were to change that to say 5 minute, you'd be using the 5 minute point of control, right? If you were using a PLC filter, prominent point of control filter, or PLC movement. All right, so this is the ES, the default settings, okay, during the day session. All right, just going back to the night, the evening, yesterday. Okay, but like I said, you know, that's the default settings. You probably want to dial it in a little bit, but you know, again, there's so many markets out there you can trade. You know, like on here's the British pound, but you see, you know, like myself, I've got all these listed in here. These are the markets I regularly look at. You know, this is the default setting. You know, if I were to add some PLC movement on here, we would clean it up a bit. You know, it's a nice buy, nice sell from up here, catching that move down. You know, I don't know what else. I like the currencies now. I think you get some decent movements. You know, bunds. If you guys are in Europe, bunds is a nice contract to trade. Okay, that's with the now PLC using PLC movement in the bund. You may want to disable it simply because, again, you know, some of these bars are just, you know, a couple of ticks. You don't want to miss the move. But you could even drill down to also, like I said, the 3 range chart underlying, right, catch some nice movements. You know, this is the major move of the day, right? We opened up, started trading lower, going sideways. Then it drops from 25, 131, 25, all the way down into the 130.80s. Right? You want to catch that move as early as possible when you've seen 1 signal, 2 signals there. You know, just go back to the normal chart type. You even go down to catalyst strength of 1. It's going to give you a lot more signals. All right, see here, sideways, boom, drops down, catches the move up, catches the move down, catches, all right, catches that down, catches this move up. I mean, yeah, there's a little bit of back and forth, move down, move up, move down, move up. You know, regular bonds are US bonds. Same setting, just leaving it on there. It catches that big move up, little moves down. Again, if you're a short-term trader, you're just looking to scalp in a few ticks, you know, this could be for you. Stephen asks, let me see here. So again, you know, if you're interested in the software, just go to this website, orderflows.com/catalyst. The actual underlying footprint chart, if you were to get the footprint chart, you just go to orderflows.com off 8, okay. The normal footprint chart is here. It's 799. Okay, this indicator's, you see here, although with this footprint chart, you're getting the footprint, you're getting a bunch of trading courses as well. So education that goes with it. Whereas the Catalyst is just a standalone indicator, and it reads, you know, people say, what's the difference between this and, you know, something like the Delta Scalper? Well, the Delta Scalper reads specifically Delta, okay? Catalyst goes beyond Delta to a different level, right? It analyzes POC movements, analyzes POC, but more importantly, analyzes the volume distribution, how it's being distributed throughout the bar, if it's bullish or bearish, okay? So standalone indicator is 279, but again, price is going to go up after the normal introductory price. You know, the guys that know me, that have been around, followed me, when I release a new indicator, you know, for those of you that follow me, for the first week or so, you're able to get it at a discount, right? And right now the discount is about, what is that, $5.99 to $2.79, so it's about 54%. So it's over half. Okay, so it's a great deal. So jump on board. So again, just go to orderflows.com/catalyst. I'll put that link in the chat. And again, you know, later today, once this video gets processed, I'm going to, I'll send it out so you guys can watch it again. I know some of you got in late, or some of you, well, if you got in early and had to leave, you won't hear this, but some of you had to jump off the call already. But just be patient and you'll get the replay later. And, you know, if you don't get my email, just check my YouTube page. So thanks everyone for coming out, spending your morning with me. I know it's a kind of, it's a holiday week. We got Easter this Sunday. I think we got Passover as well. So, you know, again, you know, today is about as calm as the market's been in a while. So it's good to get this session in, and I'll catch you guys later. Take care. Bye-bye.